Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news ahead of the long holiday weekend that suggests there may be green shoots developing in the Chinese economy. But first, the closely watched Federal Reserve Beige Book brought little new information this month. It reported that the US economic activity continued to grow slowly, but some sectors expected growth to pick up in coming months. US mortgage applications fell for a second consecutive month, while American mortgage interest rates climbed, ending a long string of rate declines that started in November 2018. Also falling was the February American trade balance, which came in at just over $49 billion for the month, for both goods and services. The goods deficit with China fell to just over $30 billion. Going the other way, however, US wholesale inventories as a proportion of sales rose again and now at 135% of current sales and the highest level since mid-2016. Stocks of unsold goods are particularly high in the furniture, hardware and machinery sectors, all these at over twice the current sales rate. China's economy grew 6.4% in the first quarter of 2019 from a year earlier, beating analysts' expectations and steady from the previous quarter, helped by sharply higher factory production. Retail sales also rose more than expected. These all came on top of booming Chinese equity markets and rising house prices. In Europe, Switzerland will become the latest country to sign up for China's Belt and Road Trade Initiative. China has been very successful recently in driving a wedge between Europe and the US. And the EU has come up with an 11-page list of items it will raise tariffs on if the US goes ahead with its threat to impose tariffs on EU goods. In Australia, high-ranked Monash University has signed a deal worth over $100 million over 10 years for Chinese investors and Chinese local governments to commercialise research and development coming out of the university's Melbourne campus. And expectations about economic growth in Australia have improved, although they are still negative. The latest Westpac Melbourne Institute report says to expect below-trend growth in the lucky country over the next 6 months. US Treasury 10-year yield is unchanged at 2.59%, and gold is still down today to $1,274 an ounce. That's down $1, and that's now at its lowest price in 2019. US oil prices are a little softer today at just on $63.50 a barrel, while the Brent benchmark is still at $71.50 a barrel. And the Kiwi dollar will start today a half a cent lower after yesterday's CPI undershoot at 67.2 US cents. On the cross rates, we're down as well to 93.7 Aussie cents, and against the euro, we're lower to 59.5 euro cents. That puts the TWI at 71.7. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.